Hello and welcome to IPO Adda, and my company today in focus is Divgi TorqTransfer Systems. It's an automobile ancillary company which provides transmission systems as well as torque cases for passenger vehicles. And joining me is Mr. Jitendra Divgi, Managing Director, and Hirendra Divgi, who is the whole-time Executive Director of the company. The company is coming out with an IPO which opens on March 1st and closes on March 3rd. Price between 560 to 590 rupees a share. The issue consists of fresh issue of 180 odd crores and OFS of 232.1 crores, taking the total issue size to 412 crores and giving it a market value of roughly over 1800 crores. Gentlemen, thank you very much for joining us on IPO Adda. To begin with, sir, uh, take us through. You're raising 180 odd crores. What are you going to use that for?
Let me take a minute and just explain to you a little bit of the background and context. As you mentioned, Sajid, we are in the business of designing and manufacturing transmission systems and gearboxes of various types for the automotive industry. This current raise that we are planning is to help us develop and introduce the next generation transmissions that will be needed in the automotive industry, specifically dual clutch automatics, hybrids, and EV transmissions.
Okay, you're using this 180 crores to set up a new facility?
New facilities, new product lines that we are bringing in for the automotive industry, India and globally.
Okay. I was going through your RHP and I saw one of the key risk areas which is there is the exposure to one company, Mahindra's. Nearly 73% of your revenues come from Mahindra's. How do you plan to de-risk that? And this has largely shot up in the last 1.5 years, where from 50 odd percent to 73% went. How do you attribute that to?
Yeah. Well, let me first back up a little and explain to you that one of our core strategies has been diversification, both the product and application, as well as customers and geography. You would agree that the times we live in, are sort of in a state of flux, and somebody called it VUCA, volatile, uncertain, complex, and ambiguous. In such an environment, I think it's to be expected that there will be ups and downs. So, on the back of the pandemic, we had the Ukraine war, uncertain geopolitics that affected some of our overseas business. And it's precisely because we had a robust portfolio that despite all of this, we grew, I think, quite impressively, if you look at, despite, all these challenges. Of course, in this, we were helped by the success of the Mahindra products. And it's the reason you see in the last couple of years, this a little bit of asymmetry. But we have a fairly robust product and application portfolio, as well as plans for both within India and overseas. So we are reasonably confident that the portfolio in time to come will be more robust.
Mr. Hitendra, Mr. Jitendra talking about volatility and the fact that there will be ups and downs in terms of the shares. But if you look at your portfolio within the Mahindra, I think a large portion is towards Mahindra Thar. And isn't that a risky thing, because products change and preferences change very fast in auto industry? So how do you plan to de-risk yourself?
Yeah, I'll just build on what Jitendra said. That's precisely the reason we have invested over the last 5 years in a robust product portfolio that includes transmissions for EVs, dual clutch automatic transmissions for the fastest growing SUV segment. What you see currently is the legacy products that we inherited from our erstwhile joint venture partner, Bob Warner. And we very soon you will see our product portfolio, the R&D that we did in the last 5 years, getting market fruition, and this dependency on one customer or one product portfolio getting more diversified. And
Give me a sense.
We also operate at a component level globally. And as Jiten said, as the geopolitics settles down, we expect our exports to be back in the region historically what it was, between 35 to 40%.
Give me a sense of how your business portfolio is going to change, because you said that it's part of the legacy. Excuse me. It's part of the legacy which you have, because I think there was a merger of a subsidiary with the company, and as a result of that merger, there is a legacy which is coming in. As we see maybe 2 years down the line and the kind of product portfolio that you have today, what is the kind of change in business model or business product profile?
Yeah. So as I said, maybe you could take this.
No, I just wanted to interject a little bit on the previous question and say that even within the Mahindra portfolio, we have a little bit of application and product diversity that perhaps people on the outside miss. In addition to Thar, we are on the very successful Scorpio N, which has a very different customer profile. We are also on the XUV 700 four-wheel drive system with a very unique torque coupler product, for which we are the only manufacturer in India. And we have a whole range of components that we make for Mahindra. So even within the Mahindra portfolio, there is a fairly robust diversification. Beyond that, to answer your question about how the profile will look, in time to come, we have been awarded. That award happened towards the end of 2021. A contract for manufacturing EV transmissions, and we are setting up capacity near Pune. So that plant will go on stream in the next couple of months. So EV transmissions will be another very solid pillar that we expect. And our export programs, as Hiren was alluding to, there are several factors globally, China plus one being one of them. The disruption that electrification is causing the world over is compelling many large tier ones and OEMs to rethink and reconfigure their supply chains to remain competitive. So this is presenting, in our considered view, unprecedented opportunities. So we expect the component business, not just for us, but for Indian industry in general, to be a significant growth opportunity. And we are well placed to take advantage of that. So
Give me
a lot of the investments that...
No, I just wanted to check. You spoke about the EV transmission thing. Who's the customer for that? Is it Mahindra again, or is this some other automobile maker for that? Because till the time of RHP, you haven't started supplying. That's what I read.
Yeah, the contract is through TACO for Tata Motors.
Okay. I just wanted to touch base with your two other clients, which is one is BorgWarner and the Russian automobile company. In the current financial year, FY23, your sales from Russia has come down drastically because of the war. I can understand that part of it. But when BorgWarner revenues have come down. So how do you plan to compensate for these two big clients?
Yeah. The Russian one, of course, is you would agree is completely understandable, given the war. In respect of the work from the US, we went through a life cycle change on one of the on the big programs that we had, but we have picked up a fairly robust order book. This is across North America, Mexico, US, a little bit in Europe, which will more than compensate. And we're also working with the wider four-wheel drive industry in the world beyond Borg Warner. So given the many years of expertise that we have in this area. So it would be premature of me to mention all that at this stage, but I can assure you that the work is going on well. And as I said, to sort of vitalize our strategy, we have opened offices in the Far East. We have one in Seoul, in Korea, and also in Cologne in Germany. So, and our US presence includes a warehouse that we have at the port of Charleston in South Carolina on the eastern seaboard of the US. So with the additional resources that we will be able to marshal as a result of this raise of equity and the work that we are doing, I think it'll strengthen the way we are positioned for these markets.
Jitendra, can you give a brief profile of how your margins are going to transform as you transform the product profile as well? Because for the first 6 months, there has been some pressure on the margin, which is there. How does it look when you change the product profile coming off legacy to new age EV transmission systems? How does it change?
Is that for me?
Yeah, Mr. Hitendra, for you.
Yeah. More or less, I think we have a very robust way of doing the financial analysis of each business that we quote on. And given our product leadership, we are confident that more or less our EBITDA margins will be sustained even as we look at growth.
Do you see the same?
Sajid, if I can just add on to that, please.
Yeah.
Yeah. As Hiren said, financial discipline is one of our key foundational building blocks. And this is deployed right from the way we do market and sell, we develop and launch products, and, in steady state operations. One of the key points that we track right through the life cycle of a business is return on invested capital. We understand that as we move from a niche segment to more mainstream products in order to generate growth, we will run into some amount of headwinds margin-wise. But I think you would agree that the ultimate arbiter would be a return on invested capital. And of course, to do that, there will always be thresholds of EBITDA and PAT that have to be secured in order to generate those ROIC, figures. Our track record clearly shows that. And because of this attention we have to these aspects, I feel, reasonably reassured that we will sustain this kind of performance going forward.
Sir, if I look at the Capex, which you have indicated in the RHP, a large part of that is coming up in FY25, 115 odd crores, if I'm not wrong. So, is it fair to assume that the fourth manufacturing facility will be up and running on you in FY26 or so?
Yes, actually, the fourth facility is going into operation in the next 2 to 3 months. We have, of course, built it at a size looking at our internal long-range plans over the next 4 to 5 years. So it would be premature again for me to divulge more details at this stage. So suffice it to say that given the way the market is moving, Sajid, it may very well be that we may have to move up some of those schedules, investment schedules. At the end of the day, we are a B2B supplier in the automotive value chain, and we have to work with the pressures and the of the industry. And the way things are moving right now, driven both by technology disruption and the China plus one phenomenon, we may end up investing that, moving up those investment schedules.
Yeah, just to add to that, Sajid, this is the best estimate we have today based on lead times machine tool manufacturers from Europe and abroad are committing. Because of this disruption in the war lead times of capital equipment suppliers are getting dragged out. But to answer and to reiterate what Jiten said, our fourth manufacturing facility is going on stream much earlier, and we also our primary raise is also supported by internal accruals that we are investing through internal accruals. So the pipeline of investment is going on. As far as the objects of the primary are concerned, this is the best estimate we have based on what dates suppliers are giving us.
Tell me one thing, by how much your capacity addition would be when the fourth one comes in?
Well, we have most of the capacities are fungible across the 4 product pillars that we have. I would say only the assembly lines are product specific to a certain extent. When I say product specific, for a product category, for example, transmissions for EVs. So as we have mentioned in our RHP, the EV business is not yet in a revenue stream situation. So that whole capacity is being built new.
My question was primarily with respect to, because EV is going to be a big one for you going forward. Do you see adoption of EV to be much faster given the kind of interaction that you had with some of the OEMs? And is that ramp up will be much faster compared to the expectation which is there for adoption of EV?
Yeah, Sanjeev, this is a question that I think everybody in the industry is wrestling with. But we need to keep 2 major trends, I think, in the background, and those have to be kept in sight. One, I think, is both the government and our OEMs, big customers, committing to carbon neutrality deadlines. They go anywhere from 2040s all the way to 2070. And those will generate, I think, requirement milestones along the way. We have to bear that in mind. I would add, in addition, that there is also, I think, in India, the concern for energy security. And therefore, there will be, I think, pressure on the industry to find alternative means. My sort of personal view is that for the next 10 to 15 years, both ICE and various forms of electrification will coexist before the transition actually happens. But having said all this, we as, having been in the business for many years, I would say that when you put a product out there, that has its own dynamics that it creates. And so it remains to be seen as, newer and newer products come out, what forces they generate in the market. So it's not inconceivable that a tipping point may come very quickly. And at least in India, we expect a fairly significant proportion of the industry to be electric.
How significant will be components for hybrid vehicles? Because that's also something which you're working on. And when do when do you see
Exactly.
that revenues to kick in?
Actually, we have already commenced components, manufacturing and supplying components of hybrids. As a proportion of our overall business, it is still quite modest. But it's very interesting because the scale at which it operates is already pretty impressive. Last 6 months, we've been operating at 7,000-8,000 plus per month. So those numbers are pretty impressive. These components are being supplied into Toyota's hybrid systems, and they're manufactured at our plant in Sirsi in Karnataka. As I explained to you that ICE will coexist with battery electric vehicles, and my sense is within that ICE space, hybridization, we could see some of that in order to enable companies to meet carbon emission norms.
Mr. Jitendra, come back to a little bit of financials. You said that your internal accruals are good enough for investments. You have a positive cash flow from operations, but on an overall basis, the cash it's a negative cash flow which is there for because of the investing and the financing that you do. When do you see additional positive cash flows coming in on a net basis for the company, given the fact that you are still in a investment phase, and what is the kind of dividend policy that you have?
Jiten, would you like to take this?
Yeah. So I think the dividend policy is very clearly enunciated in our RHP, and we have the track record for the last 3 years clearly laid out. So I think we will look at the capital outlays every year because we have a fairly disciplined budgeting system. I think, based on that, going forward, we will be able to sustain our dividend payouts.
Gentlemen, it was a pleasure talking to you today. The Divgi TorqTransfer Systems IPO opens on March 1st, price between 560 to 590. A fresh issue of 180 odd crores and OFS of 232 crores. Thank you very much for joining us on BQ Prime.
Thank you very much, Sajid.
Thank you so much.
Appreciate